Consumer. Joining us now is Bill Simon, former CEO of Walmart U.S. I guess first thing we say, Bill, is you certainly left that company in great shape. Kudos, great job. That's a good way to intro you, isn't it?
Yeah, that's awesome. Yeah, thank you. Appreciate it.
Can you, in a nutshell, somehow describe the dichotomy that we're seeing between the winners and the losers, Walmart being one of the winners?
Yeah, it's just a math equation, really, if you think about it. You know, you've got Walmart showing really good growth and Amazon, of course, showing really good top-line growth. Throw in Target, who, by the way, Brian Cornell's doing just a phenomenal job there right now. And Costco, which has been growing. Those retailers, those group of retailers that are growing, Home Depot and Lowe's, they're among the top 10 retailers. So if you just take the top 4, for example, that's probably 25 to 30% of retail that are growing above the retail average. They're sucking up a lot of oxygen and making it difficult for others. So it's not really so much of a question of haves and have-nots. The haves are the big ones, and they're making it very difficult on the smaller ones, particularly with the model that they're operating under now. Walmart and Amazon going toe-to-toe on shipping and price. And if you look at both of those retailers, they grew their top line, but they're shrinking their operating income line. So they're investing a lot of money to try to grow the top line. And if you don't have scale like Target and Costco and some of the big guys, it's really, really difficult to compete with that. And then throw in what you were talking about, you know, difficulties in the mall real estate environment. And I think that's why you're seeing this bifurcation of results.
Is there a fix? If they put you on the board or called you in, what suggestions would you have for the companies that are now occupying the loser list?
There are growth areas in retail that still exist. You mentioned one of them just a little bit earlier, small formats. You look at small formats, Walmart sort of walked away from that, deciding to focus on digital. But since they walked away, there's been about 10,000 small stores, dollar stores, Aldi's just doing a really good job right now. And so you talked about Target still building stores, but building smaller formats. I think there's growth there. You can find it if you look for it. It's just a little bit more difficult than it might have been before because of the battle that's going on online.
The XRT, which is the index institutions use to get exposure to retail when they want to just pour money in, has been a boneyard for investors for almost 2 years now. I'm really interested in your opinion about what happens to the have-nots you just referenced. Should I be loading up on the losers with the assumption they'll be acquired at small premiums? What happens to them? Or they just go to zero?
No, I don't think they go to zero. I think there's some value there because they're brands, they're operating, their ongoing concerns. I think some of them will make the transition and do it well, and some of them probably won't. And you have to be able to sort through that. And when you look at an index like that, they buy stock. They buy 10 or 20 or 30 or 100 stocks, and they weight them all in different proportions, when the reality is Walmart's $385 billion and Macy's is $25 billion in the U.S. And so, you know, they're not equal. Well, they might be equal when you buy them because they cost you the same dollar. They're not equal in growth. And I think you've got to sort through that, find the ones that have a strategy for growth, and you can invest there. The other ones, being stuck in the middle without something to be famous for, none of that works. So I'd look for.
Bill,
I'd look for.
I haven't had a guy in retail say, I don't think a guy or gal or anyone that represents retail say, yeah, China, we need to do this. The tariffs are the right thing. Will you say that? And where is the effect of tariffs on Target or on Walmart or really across the entire industry? Seeing anything yet?
I think the tariff discussion from a retail perspective has been overblown. Clearly, there are some products and some companies with high exposure to China that are going to suffer from it. But you wouldn't see Target and Walmart raising their guidance if they were worried about tariffs in the second half of the year. I don't think the tariff impact is going to occur for retailers on the size and scale that many thought. You know, companies have had over a year now to figure out how to mitigate, move supply chains and supply lines. I think it could have a long and permanent effect on China because once those supply chains move, it's a generation before they come back. So I think American retailers and consumers will figure out how to navigate around whatever tariffs actually get implemented. I think it's China that's going to suffer.